Imagine a world where machines not only think, but innovate, where algorithms drive decisions, and where artificial intelligence shapes our everyday lives. This isn't science fiction. It's the reality of our rapidly evolving technological landscape. Are you ready to unlock the potential of AI investments? Welcome to the Savvy Finance Corner YouTube channel. Wealth begins with knowledge. In today's global economy, AI isn't just a buzzword. It's a fundamental driver of productivity and competitiveness, much like the Internet revolution of the 1990s. AI is transforming industries across the board, from healthcare to finance, transportation to consumer tech. This seismic shift hasn't gone unnoticed by savvy investors who recognize AI as a multi-trillion-dollar opportunity. The massive adoption of AI technologies is creating both short-term gains and long-term value, making it a prime focus for those looking to capitalize on the next big thing in tech. Let's dive into the key AI trends that are fueling this growth. First up is the integration of machine learning and automation in business operations. Companies are leveraging AI to streamline their supply chains, enhance marketing strategies, and revolutionize customer service. This not only reduces costs, but significantly improves efficiency. As an investor, you should keep a close eye on companies that are at the forefront of providing these automation platforms. But that's just the tip of the iceberg. AI is making waves in high-growth, high-barrier sectors like healthcare, autonomous vehicles, and robotics. In healthcare, AI is saving billions by improving diagnostics and treatment plans. The autonomous driving industry is completely reshaping our concept of mobility. And in robotics, AI is driving the future of labor and manufacturing. Each of these sectors represents a hotspot for investment, with the potential for substantial returns. Perhaps the most talked about development in recent times is generative AI. Tools like ChatGPT and AI-powered image creation have gone mainstream. With corporations rapidly adopting these technologies for content creation, design, and even code generation, the enterprise software as a service (SaaS) adoption curve for these tools is a crucial indicator for identifying growth stocks in this space. It's not just private companies driving this AI revolution. Governments around the world, including the US, EU, and China, are investing billions in AI infrastructure and research and development. This creates a policy-backed momentum that significantly reduces investment risk and further fuels the AI boom. Now, let's talk about market impact and investment potential. AI is disrupting traditional industries at an unprecedented rate. From retail automation to AI-driven banking, entire sectors are being restructured. As an investor, your focus should be on firms leading this disruption, not those lagging behind. So, which sectors are most likely to benefit? Tech firms, particularly chip makers and cloud providers, are at the forefront. Healthcare innovators, leveraging AI for breakthrough treatments and diagnostics, are also poised for growth. Manufacturing companies, embracing smart factories and AI-driven processes, are set to dominate. And in the finance sector, firms utilizing AI-powered analytics are reshaping how we think about money management. These areas represent multi-decade growth opportunities, similar to what we saw during the Internet boom. Speaking of the Internet boom, it's an apt comparison when we look at AI as a long-term growth driver. Like the dot-com era, the AI revolution will create both winners and losers. The challenge for investors is to identify sustainable companies with real potential, rather than getting caught up in speculative hype. Let's turn our attention to some promising AI-related stocks to watch. Leading tech giants like Microsoft, Alphabet, and NVIDIA are already deeply embedding AI into their products and services. NVIDIA dominates the GPU market, crucial for AI processing. Microsoft is integrating AI across its Azure cloud platform and Office suite. Alphabet continues to lead in AI research and applications. These established players offer relatively safe bets for investors looking to enter the AI space. But don't overlook emerging AI-focused companies. Startups in cloud AI, data analytics, and robotics could deliver exponential returns. However, it's crucial to be aware of the risks associated with these newer players, particularly the potential for overvaluation. This brings us to an important point: the balance between the high-growth, high-risk profile of startups and the steady, lower-risk profile of established firms. Your investment strategy should carefully weigh these factors based on your risk tolerance and investment goals. Of course, no investment landscape is without its risks and challenges. The AI market is prone to volatility and hype cycles, much like we've seen in past tech bubbles. Investors must be wary of short-term overpricing and make decisions based on solid fundamentals rather than market excitement. Regulatory concerns around data privacy and ethics pose another challenge. Governments may impose strict AI regulations, potentially slowing growth in certain areas. However, this also presents an opportunity for companies that lead in ethical AI development and implementation. The global race for AI dominance adds another layer of complexity. While the U.S. currently leads in many areas of AI development, China is rapidly closing the gap. Meanwhile, the EU is focusing on creating a regulatory framework for AI. This international competition creates both pressure for innovation and potential geopolitical risks for investors to consider. So, how should you approach investing in AI? First and foremost, diversification is key. Rather than putting all your eggs in one basket, consider spreading your investments across various AI sectors, including hardware, software, and applications. This approach helps mitigate risk while still allowing you to capture the overall growth of the AI market. For those who prefer a more hands-off approach, balancing individual growth stocks with ETFs focused on technology can be a smart strategy. ETFs like the Global X Robotics and AI ETF allow retail investors to capture AI growth without the risk associated with picking individual stocks. While growth stocks offer higher upside potential, they also come with greater volatility. Perhaps most importantly, approach AI investments with a long-term horizon. AI is not a short-term trend. It's a structural shift akin to the advent of electricity or the internet. Smart investors should consider holding AI as a core part of their portfolio for years to come. To wrap up, let's recap the key points. AI represents a high potential but still evolving market. While the opportunities are immense, investors must remain cautious of hype cycles and do their due diligence. The AI landscape is full of speculative noise, making thorough research and risk management absolutely critical. Remember, investing in AI is not just about riding the wave of the next big thing. It's about being part of a technological revolution that's reshaping our world. Whether you're a seasoned investor or just starting out, understanding the potential of AI and its impact on various industries is crucial for making informed investment decisions. We'd love to hear your thoughts on AI investments. What strategies are you considering? Are there any AI companies you are particularly excited about? Share your insights in the comments below. And don't forget to subscribe to our channel for more cutting-edge financial advice and investment strategies. Until next time, keep investing wisely and stay ahead of the curve in the exciting world of AI technology.